What's up, guys? Welcome back to the channel. So today we are going to talk about ticker symbol FBGRX, the Fidelity Blue Chip Growth Fund. This is a fund that you have to have a strong tolerance for risk and be able to stomach the ups and downs. We're going to break down the performance and risk, the ratings, the composition, the fees and distribution, the commentary, and we're also going to go through a personal investment that I'm going to show you of FBGRX and why I think if you can hold this for the long term, you can definitely do very well. So looking at the prospectus, we can see this is updated from March 1st, 2024. The principal investment strategy is investing primarily in common stocks. That means that 80% of its assets are in blue chip companies. It is managed by Fidelity's Management and Research Company, LLC, and invest in companies that FMR believes to have above average growth potential. So these are what's called growth stocks. They invest in domestic and foreign issuers. Looking at the composition, you can see that this is very tech heavy. Top 10 holdings make up 60% of the portfolio. There's a total of 362 stocks that are within this portfolio, but just these 10 make up 60%. So look at NVIDIA, makes up 13.15%, Microsoft makes up 9.1%, Amazon makes up 8%, Apple makes up 6%, Google is 5.8, Meta 5.59. So these are actively managed. So these can be taken out at any time by the owner, and they can put in different companies that they think are going to perform well over the long term. But I wanted you just to get a quick taste of what companies are making up this fund. If you decide to invest in this fund, you have to be ready for the swings. I want to give you an example. Look at year-by-year returns. 2013, this fund made 39%. 2014, it was up 14%. So that's awesome. It's already almost 60% in 2 years. But then watch this. 2015, up 6%, 1.5%, 36% in 2017, and then 33%, 62%, 22%. And then 2022 came and minus 38%. So if you are buying this, you can get caught in some pretty ugly swings. So you just have to be very careful and be very aware that in the bull markets, this fund is going to crush it, but in bear markets, this fund is going to get destroyed. And you have to be able to mentally take that and think to yourself, will I be able to accept these pullbacks and buy them as buying opportunities? Let's take a look at FBGRX as a whole. It currently trades at 193. It has an expense ratio of 0.48%, so you are paying a premium for a manager to actively manage this fund. Its top sector over here on the right side is 41.46% in technology, where the companies are pretty much all within the United States. And as we reviewed, 80% of the assets in blue chip companies, all within growth stocks. There's a lot of risk with this type of fund because it is in growth stocks. So it definitely can go up and down. And here's another graph that I just wanted you to see, that if you look at the Fidelity Blue Chip Growth Fund, in 1 year, it is up 45.2%. That is amazing returns. But you have to be in this for the long run to really get these kind of gains, because you don't know when they're going to happen, when's the next bull run, etc. Over 3 years, it's averaged 6%. 5 years, 18%. Over 10 years, it's averaged 17%. But the life of the fund is 12% a year. So you're paying that 0.48% fee to make that 12% a year, but you can catch it where you do get those nice 40, 50% within 1 year, which is excellent. Looking at the hypothetical growth, if you were to buy $10,000 in 2014, it would have been worth today $50,000. So $10,000 being worth $50,000 over 10 years, that's an excellent return on investment. And I just like showing these calendar year total returns because you can see from 2024, 11%, 2023 was 55% gains, 2022, which was the worst year in red, as you can see here, at negative 38%. So can you stomach losing 38% of your investment? Even though you're holding, if you don't sell, but you have to be able to stomach that pullback. So that's definitely a very aggressive fund that you need to be aware of. Comparing the ratings, you can see out of 1,100 funds, it is rated 5 stars. Out of 10 years, it is rated 5 stars. So this is an excellent fund. It has very high ratings, and that's because of the returns that it does produce. So you're paying that expense ratio 0.48%, but does it really matter if you're making 17, sometimes 45% in 1 year? That's really up to you to decide. Looking at the overall composition, we reviewed some of it, but the technology is 41%, like we discussed. Consumer discretionary is 20%, communication services 16%, healthcare is 8%, industrials 5%. And remember, this fund barely has any financials. 3%, no staples, no energy. You will see here under composition that it is under large growth. 96% of the fund's assets are covered. This means that it invests in companies with greater than $10 billion that fund managers believe are poised for growth. So domestic equities, 95%. And just to get the regional diversification, United States is 95%, and the others 2%, Europe 1.7%, and the list gets a little bit lower as we go. These were the companies, the top 10 that we were holding currently, and that can change over time because it is actively managed. So one more time, reviewing the expenses and fees, you can see 0.48%. What does that mean? That means for every $1,000 you have invested, you have to pay $4.80. So you can do the math on that, $10,000, $100,000, just to give you an idea. Dividend history, it pays, it looks like twice a year. You get 0.03 or 0.06. You're not in this for the dividends. These are growth stocks. They don't usually pay dividends. You're there trying to get a higher percentage gain. You're trying to beat the S&P 500. There is a minimal investment of $0. So you can start with $10 a month and you can easily buy into this. But look at the price change. It's so interesting because you look at the price history by month and look at April 24 at 193, March was 201, 194, then it dropped to 178, 156. So a lot of growth in the last year with this fund. Now, I do want to provide you with another alternative that if you do not like the expense ratio, there's a very similar fund compared to FBGRX, which is known as FSPGX, and I'll post a video on that at the end of this so you can quickly click on that and watch and compare the differences. But I'm going to do a quick comparison just for you. So if you look here at the minimum growth investment, you can see FSPGX, which is this light blue one. I'm highlighting over it now so you can see it. This one is FSPGX, and this is FBGRX. And you can see during bull markets, this is making higher return. So if you were to invest, let's go over 10 years with this. Let's say you started in 2016. The light blue is FSPGX, which is the lower expense ratio growth fund versus FBGRX. You can see that FBGRX crushes this low cost growth fund. But it's still definitely a good pick because I personally own FSPGX, but I want you to be aware of it because of the lower fees. So your $10,000 investment turned to $36,000 versus FBGRX, your $10,000 investment turned to $49,000. If you look at the overview, you can see, we can just get a quick numbers comparison. Look at FSPGX on top, FBGRX on the bottom, and you can see that year to date, FBGRX, much higher gains. 1 year, 45% versus 31%, but it also depends on your risk tolerance because when the market is a bear market, you're going to see FBGRX go a lot lower. Also, looking at the 5 years, very close, 18 versus 16%. But in 1 year, you can definitely have bigger differences. Looking at the risk, they are both rated as higher risk because they're in growth funds. And then looking at the fees, I just wanted you to see this. 0.48%, which we're aware of. We reviewed that. But this similar growth fund that I'll post at the end of the video, FSPGX, is a 0.035% expense ratio. So you can see that you're paying a less expense ratio, but you're getting different returns here. So not all growth funds are created equal. And you will see that in FBGRX, we said 60% holds those big tech companies, whereas FSPGX does about 50 to 52%. So you can see that makes a difference in the terms of gains that you're going to see. All right, guys, thanks for tuning in. If you made it this long, please hit that thumbs up, share the video, and definitely leave a comment. Tell me if you're going to invest in FBGRX or you'll take the cheaper alternative with FSPGX. This is my channel, Trading Simplified. Just take a look at my playlist. I have a lot to offer here. Investing ideas, trading P&L 2024, penny stocks, any Fidelity index fund and ETFs that I invest in or that I'm currently looking at, I try to share with you guys so you can have other alternatives. Investing for beginners, if you're completely new, looking at long-term investments, if you want to know how to use the Fidelity Active Trader Pro, I can show you how to do that as well. and then the Vanguard investment tutorial as well. So definitely check them out. I have a lot to offer. I just want you to at least be aware of these. When you go on my channel, I have a little membership. If you feel like I'm providing value, you can always look at that part, click on the membership. I have one member so far, so I really appreciate that he's given back, which is great. And check out my community playlist as well. Different things.